Hey everybody, I'm hoping you're having a good day. It is June 17th and I wanted to make a quick video and talk about myself this evening a little bit because that's kind of easy for me to do as it is for all of us to do. So the title of this video is I was VOO and chill until I studied Bitcoin. And what that means is VOO or VOO is the stock market index fund for the S&P 500, and it's just a Vanguard index fund for the S&P 500. It has a very low expense ratio, and if you follow traditional finance, that's typically kind of the path that people settle on as the easiest kind of set it and forget it financial plan. So in my investing journey and trying to build a nest egg and wealth and all these types of things as we're all kind of on each day, I went through a lot of kind of different trains of thoughts on how to approach finance. So some of the early finance books I read were like Rich Dad Poor Dad by Robert Kiyosaki. I read Dave Ramsey's books, so The Total Money Makeover, things like that. So those are kind of two conflicting methods of building wealth there. I read a whole variety of different just financial books that shill things like mutual funds, things like that. I consume tons of hours of YouTube content on traditional finance stuff, which is basically, if you boil all that down, the basic premise of it is to get out of consumer debt and stay out of consumer debt, build up a little bit of a emergency fund or a 6-month reserve of cash just to have on hand, and then do safe things like invest in mutual funds or index funds, things like that. No single stocks, it's too risky. And do dollar cost averaging into those funds, and then do safe things like pay off your house as quickly as possible, and just ride off into the sunset of retirement. And that's all fair and well, honestly. It works for people, but it doesn't really provide the abundance that I'd like to have in life, especially when you have this thing called inflation kind of going around. And unfortunately, we live in an inflationary system. And so I believe going into the coming decades, as boomers and people like that are going to retire, that have kind of followed this traditional path of, just pay everything off, live debt free, don't borrow more than you need, and just put it all in mutual funds, index funds, bonds, those types of things, and everything will be fine and dandy. I think they're going to be horribly disappointed when they get to retirement, and I hope they get to live it out and have the retirement that they do deserve from a lifetime of work. However, I think it's going to be stolen away from them, and many of the boomers are going to find themselves back at Walmart as greeters, clerks, those types of just menial jobs, making a small wage just to get by. And I hope that's not the case, but I think unfortunately it's going to be for a lot of people. And many people don't even have a nest egg built up or have anything to ride on into retirement anyway. So I know it's going to happen for some people. But after consuming all this content, reading all these books, I was like, okay, I've got it figured out. I've got consumer debt on lock. It's all gone. I have, a very reasonable mortgage. I'll get to that whenever I need to. I'll invest. I'll do, 401k contributions with the match and all this type of stuff. I'll do Roth IRA and just, throw it all in an S&P 500 index fund and wait 35 years of working and be pleasantly surprised at the end of that I have this great nest egg that is providing me an income, but not actually bringing down the principal at all, right? That's like the golden situation for retirement that everybody really, wants to get to, but few ever do, really. So I started to question that when Bitcoin really became more mainstream around 2020. And that is really when I began my journey starting Bitcoin, starting to learn about it, starting to study it, playing with it, that type of stuff. And it made me question what I was doing, because when I was doing that, yes, my net worth was increasing and I felt like I was building wealth, but it wasn't going up to a degree that I thought was significant enough, especially with inflation, seeing the cost of living increasing at the current rate. And this is with me working still, and my cost of living was going up, and you know, my investments were growing, but not nearly at a rate that I thought they should have been. My income wasn't growing at a rate that was keeping up with inflation. And so it started to make me question, you know, is this gonna all work out? The plan is just invest early and often, and you'll be fine in 30 to 35 years. But it's scary to not know if that's actually going to work out. And I think that keeps us up at night, a lot of us up at night. So I started to look at my investments a lot closer. And a lot of my investments were just in S&P 500 index funds with Vanguard or whoever had the lowest expense ratio. And I started to really look at the return rate that I could expect or anticipate from those types of funds. And really, when you boil it down and get to the bottom of it, the return rate on something like that is not very high, especially for the risk that you're taking on and investing in something like that. So historically, it's averaged anywhere from 10 to 12% compound annual growth rate, which seems pretty decent. But once you account for inflation and expenses from the fund and things like that, you're really likely only yielding 7-8%, and that's if you believe CPI, which is a complete misnomer. It's a joke. CPI is not a representative value for a true inflation, especially for you and your family. So let's just say CPI is accurate. You're looking at 7 to 8% returns on something that you're taking a risk on. Okay, because equities are a risk. The reason why, something like in the case of VOO, it's basically heavily weighted by the Magnificent Seven, the largest 7 companies in the world, and all of those companies could have something happen catastrophically that just completely wipe out a lot of the gains and values in that stock market index. And further to that, all the other 493 companies are basically contributing nil to the index. So is it really that diversified? I don't think so. So I looked at the fund itself, realized it's kind of heavily weighted in a bad way. And then I looked at those companies that are basically holding it up themselves. And, I don't really agree with any of those companies. I'm not a huge fan of any of them, either their CEOs, the products that produce and things like that. And you might say, well, that's hypocritical. You're filming on an iPhone. How dare you get packages from Amazon, you're a hypocrite, whatever. Well, that's true, but doesn't mean I support their overall missions and things like that, and I agree with their overall mission. So I thought about it a little bit further, and I realized that all of these companies have their own AI models that they're training. All of the Mag 7 companies, Amazon, Tesla, Apple, you name it. They all are developing AI models that they are doing KYC, which is know your customer. So they want to know who you are if you're using their model. And you bet they are collecting all of that information and learning from it, harvesting it, using it to make their models smarter and know more about you and keep that information databased forever and ever and ever. And I am not supportive of that whatsoever, especially because a lot of these AI models are free. They just need you to sign up and give over your information, KYC, right? And from there, you can use them and do whatever you want. Now, I have used them just, in beta testing myself to just throw it random questions that I find of interest at the time. And of course, I never give it any personal information or anything like that. But it is alarming at how smart those large language models are getting. And if you believe that they will use those in your best interest, then I don't know what to say, but you are sadly mistaken. They are going to use those models to manipulate you and control you in ways we've never seen in human history. And it's a way of securing more profits, securing more market share, all these things. And it's concerning to me for sure. So I truly do not want to fund these companies by investing in them through my 401k, through a Vanguard index fund, those types of things. So what am I to do as an investor? What are we to do if you don't like that either? And that is what led me to start studying Bitcoin. And in the beginning, when I started in 2020, it really was a gamble for me. I was a speculator in Bitcoin when I first started. I thought, it'd be fun, throw a little bit of money in on exchange, watch it go up, sell, cash out, and look at me. I'm so smart. I'm a day trader, whatever. And so I did that. I put money in an exchange, and I got up to being 20% up on my cash, and I sold it and took the profits, and then I ended up buying back in. But I thought I was going to be a speculator and ride Bitcoin on the way up and just collect all these profits and go on with my life. And when I'm talking about this, it was small, insignificant amount of monies, but when I saw the returns, I was very excited about it, and it kept me really interested in it. Well, I'm glad I started that way, because it started small for me, low risk, and it got me paying attention to Bitcoin. So I do encourage people to speculate in it first and just see it as a gamble and get that rush of the interest of when it goes up and appreciates extremely over a short period of time. You get that thrill of doubling your money or whatever, those types of things, because it gets you paying attention to it. Now, you need to also be prepared for the drawdowns, because those are just as harsh as the rises. And you need to understand that you're not giving up that money. You're not selling and taking a loss. You're going to hold on to that Bitcoin forever. So as long as you do that, you probably won't be disappointed, because Bitcoin has an amazing track record of returns over its 16-year history. So started as a speculator, then moved into being more of an investor, where I said, okay, I'm going to dollar cost average into Bitcoin, and I'll just accumulate it. And once it reaches a certain level, I'll sell it, and I'll diversify into other things, right? So, I thought Bitcoin was something that I was going to ride up, this time a little bit more strategically, where I was doing, regular purchases and things like that. I was going to monitor it, ride it up to a certain level, and then sell and diversify. That's typical investing advice, is sell the winners and buy the losers. That's diversification in a nutshell, which is horrible, horrible advice. So I rode that wave for a while. Bitcoin went on some wild swings. I had a lot of fun watching that. And then I really studied more and more. And I listened to people like Michael Saylor. I listened to, Robert Breedlove, all the big major Bitcoin podcasters out there. And I realized that what I was holding on to was something more than just an investment that I was going to buy and ride up this wave and then sell and go back to the way my life was. And that's when I became a hodler, hold on for dear life, or whatever you want to call it, whatever the catchy Bitcoin term is today. So basically, I think all Bitcoiners cross a Rubicon where they realize they're never going back to fiat. They're never going back to holding dollars. And the reason for that is, once you have Bitcoin and you've worked for it and you're saving it and it's in your private possession, and you get to ride the Bitcoin wave through cycle after cycle, it starts to return a lot of abundance to you, and you start to realize there's not really an incentive to go back to dollars. There's no point. Do you want to go back to a coercive monopoly that controls all the money centrally? That's what you get with central banks and nation-state governments. Do you want to go back to a money that devalues without your vote at a whim, whenever there's emergencies, whether you agree with them or not? That's what you get with fiat. Do you want to go back to a system where the major players that have influence in it, like mega corporations and things like that, don't really have your best interests at heart, and they're developing AI models to control you even more than they do today? I don't think so. So those are some of the drawbacks you start to see by being in dollars after you've crossed into Bitcoin, and you realize that there's really no point in going back. Why would you? There is no incentive. That is a melting iceberg, that being dollars, that can lose value at a faster and faster rate beyond your control. And if you don't believe me, I mean, try to meet people from other countries that have experienced hyperinflation. It happens all the time. Currencies hyperinflate. Speak to a native from Argentina or Turkey or almost any African country, right? They've lived through the harsh effects of inflation. And I'm talking double digit, triple digit inflation, completely devastating all wealth that existed. And I think they will appreciate the security that Bitcoin provides by not being debased by the whim of a nation state government. And I think we as Westerners, people from, the Western world, I'm talking the United States, Canada, Australia, most of Western Europe, those types of countries, we're spoiled by the fact that our currencies are relatively stable. They're not a great store of value, but they're stable compared to other countries. And so we feel safe and comfortable in holding on to those. But really, we are all getting screwed, to put it bluntly. So anyway, if something to think about here, and a little bit of background about myself, is I was previously VOO and chill, thinking that was going to be great for several decades and I'd be fine. But I've realized that that was a path that was likely going to lead me to destitution because of the continuous emergencies that crop up and cause us to print more money and debase everyone participating in that system. And so I recognized that. I looked for solutions. I found Bitcoin. I opted out, and I continue to study, hold, and accumulate Bitcoin as much as possible. If you want to get on that path, I highly suggest you keep following me, keep consuming Bitcoin content, and learn as much as you can, and save yourself, save your family from destitution, because there really is nothing that is going to stop the money printing and the destruction of the currency. And if that's where your store of value is, then you should definitely be concerned and take this seriously. So thanks for listening if you watched this long, and I'll